Crypto cycles are fascinating. Usually after a bear market, we first saw Bitcoin appreciate. Afterwards, after we've already come out, we see the gains getting rolled over into Ethereum. And so Ethereum recently rallied as well. Now the question is, how much more risk on will this market get? As in, are we going to see a rollover effect from Ethereum to Solana, and then beyond that to the smaller altcoins? It might seem a bit scary to buy Solana now when we just look at the very long-term chart. This is Solana in US dollars since April of 2020, and the dotted line over here, this is the average price during its entire lifetime, which is roughly 80 US dollars. Currently we are at 224 US dollars. And there hasn't been too many times in history where Solana was much higher than the current price. Now here's what I mean with capital rotation. Have a look at this chart. This shows the net position change over time. So in orange, we've got Bitcoin, and in blue, we've got Ethereum. Usually, we first see Bitcoin appreciating, and then with a lag, the capital rotating towards Ethereum as well. We saw this in 2017. We also saw this in 2020. In 2023, both assets appreciated at similar times, but then again, last year, it was first Bitcoin that went up and then Ethereum followed. Have a look at this comparison. This is Bitcoin outperforming ETH, but recently, if we zoom in a bit more, it's actually Ethereum that's doing better than Bitcoin. And so will Solana benefit from this? The rotation from Bitcoin to ETH and now from ETH to SOL. It is of course not just market psychology and technical analysis that matters, it's also the fundamentals. The reason why Bitcoin outperformed most other cryptocurrencies in the last years is the inflows through the ETFs, that's shown over here, and through the treasury companies, that's shown over here, which is of course spearheaded by Michael Saylor's strategy. A very similar trend followed for Ethereum. So initially the Ethereum ETF didn't gain too much traction, but recently that has changed a lot. And the reason again is treasury companies. There are now several treasury companies that are buying up Ethereum regularly. And that's spearheaded by Tom Lee's BitMine. And so that then explains why Ethereum is outperforming the rest of the market since the middle of April of this year. We've seen an outperformance of roughly 100%. And recently we are turning around at a very similar level where we did see turnarounds recently. So the question is, are we going to see this rally continue, or will Ethereum dominance potentially fall for the benefit of the Solana dominance? And so let's have a look at Solana dominance. So how much of all of crypto is currently in the market cap of Solana? In the last 2 years, we have been trading in a quite stable range. We are somewhat elevated within that range, and we could still outperform by another 15%, potentially 22%. But the question really is, what happens afterwards? Currently, the momentum is still bullish. Now, the Solana dominance just looks at the entire cryptocurrency market cap and looks at how big is Solana within that. Now, let's compare Solana's market cap relative to Bitcoin and Ethereum, because this is where we expect the capital rotation. That's then shown in this chart. This is the Solana market cap divided by the market cap of Bitcoin plus Ethereum. It doesn't look that different to the dominance chart, but we do see a slightly rising trend over time. Unfortunately though, the upside here isn't that great either. It's 30%, so it's better compared to what we've seen with the dominance chart. And still the current momentum is very bullish, but there are question marks. What's going to happen once we reach those elevated levels again? Because again, it's not just technical analysis, it's not just psychology. Of course, those lines do matter to a degree, because if the vast majority of people think that Solana is currently expensive, then there will be less purchasers, there will be more sellers, and so this becomes a self-fulfilling prophecy. But we also have to look at the fundamentals. Now, fundamentally, the total value locked, as in the capital that's currently on the Solana chain, is going up, and it did hit an all-time high. But when we measure that total value locked in Solana instead of in US dollars, we've already seen a peak in April of this year. We haven't really seen that much more growth in the last 5 months. So all of the US dollar growth in terms of total value locked is just due to the Solana price going up, not due to more usage of the blockchain. Here's another way to look at this. This is the number of active addresses on the Solana chain, and it tends to rather go down since October of last year. Why is it going down? It's going down because the main use case of Solana has been shrinking, and that was meme coin trading, especially trading of meme coins on the pump.fun ecosystem. Have a look at the number of deployed transactions on pump.fun. That peaked in November of last year. We saw a secondary rally in January of this year, but since then this is declining. Now, why would meme coin trading suddenly decline? It's because meme coin trading is a player versus player game, right? Capital concentrates towards a few players, the players that are lucky or the players that have skill, and the others, they tend to lose their money. And so since the money is lost, it's very unlikely that those investors will add more capital to the system. A system that concentrates capital over time tends to slow down in velocity. And that's what we see here with pump.fun as well. Have a look at the decentralized exchange trading volume over time on Solana. It doesn't look as bad as the number of deployed transactions on pump.fun, but it's not growing that much in the last 6 months either. Here we've got the Solana chain fees, so the activity on the chain is not spiking. The gas fees aren't necessarily that high. The demand for blockchain space does not exceed the capacity. And in the end, the price development of any cryptocurrency is always the result of demand and supply. And so Solana is unfortunately a slightly inflationary token as well. There is more supply hitting the market over time. It's very gradual and it only matters in the very long term, but it's still worth noticing. The fully diluted value of Solana is not at an all-time high. There is a bit of potential growth if the historical resistances are of any indication. Again, in the range of 20 to 30% from here. But really, in order to hit new all-time highs in terms of valuation, in terms of price, in terms of dominance, we need to see new activity. We need to see the number of active wallets going up. We need to see new use cases of Solana. We need to see some excitement again. I don't think that a capital rotation, a classical capital rotation from Bitcoin to Ethereum to Solana is enough to bring it beyond the resistances that we see on those various charts. There is still some upside, but what's going to happen after we've reached those elevated levels, that's really depending on the fundamentals of Solana, whether or not we will see a new wave of usage growth. Now, here's something I want you to avoid. Please do not follow people that tell you that there's the next 100x cryptocurrency where you're getting rich quick. Because you might have read about the statistic that 99.6% of pump.fun traders, so traders of smaller meme coins, did not realize a profit over just $10,000. The vast majority of people lose. The winners might be among those influencers, the winners might be among the insiders, and the rest is simply burning their money. And so because of that capital concentration process, because more and more people lose their money, ecosystems like pump.fun tend to shrink when there's no new marketing. And so what's the solution here? Because we want to make money over time, right? What's actually realistic if we can't make our 100x? There is a simple conservative solution. It's just dollar cost averaging. It's buying $1,000, for example, every month into something like Bitcoin. So do this for longer than a cycle, so for more than 4 years, in this example 6 years, then the performance looks like this. So had you dollar cost average into the S&P 500 or into gold, you have gotten this performance, but by buying into Bitcoin, you're getting this performance here. Now the time horizon matters here, right? Because there are bear markets. We include here a bear market where Bitcoin went from almost 70K all the way down to 16K. So at that point, the performance of the S&P 500 and gold and Bitcoin were very similar. But if the time horizon is long enough, then just within 6 years and just $1,000 per month, a comfortable nest egg of 360K can be built. It's not sexy, it takes longer, it takes effort, it takes contributions. It's not getting rich quick, but it's getting rich consistently. Now, I'm a fan of beating this, of course, because the crypto market is still very inefficient, but it's not inefficient in the way how you might expect. I am dollar cost averaging into my trading portfolio as well. This is my active trading portfolio measured in BTC. And my plan is to get to 8 Bitcoin within the next 2 years. Now, I didn't just buy Bitcoin with my trading portfolio. I actually did do active trading that did outperform buying and holding. I got this alpha here. So had I not dollar cost averaged, if I just paid into the trading portfolio once, I would have roughly doubled the amount within 48 years. So because I didn't just buy into Bitcoin, but I did do active trading, I'm now close to 5 Bitcoin and not just close to 2.5 Bitcoin. So what's more important? Is it the trading? Is it the regular contribution? The answer is both is important. At the beginning, the regular contribution is more important. At the end, generating the alpha is becoming more important, right? Because once this is at 3x, not just at 2x, then 2/3 of the Bitcoin in the portfolio is just due to alpha and is not due to dollar cost averaging. So both is important. Contributing is more important at the beginning. Trying to outtrade everything when the capital base is still small is not the smartest idea. Again, you've got a very high likelihood of losing it all. And so I'm actually doing the exact opposite of what most other people are doing. Most others try to find the next best altcoins. They have maybe a diversified altcoin portfolio, 10, 20 altcoins, and they try to beat Bitcoin that way. But more often than not, this fails. If you listen to people like this, how ApeCoin will be the next 100x investment, this video was published 8 months ago, then you would have underperformed Bitcoin by 44% since then. Now, this is not just in the last 8 months. Have a look at what ApeCoin did prior to that. It just underperformed Bitcoin extremely consistently. And so that's how everybody gets wrecked. That's how the majority of people lose. Most people buy things that get recommended by influencers, and very often those influencers get paid by the different crypto projects to do that marketing. I, by the way, never take any money from any crypto project ever. The only money that I take is from the premium members that support this channel here. But more of that in a second. Here's the reason why ApeCoin did so poorly. The supply increased over time massively, and the early insiders at the team, etc., they get token unlocks over time and they dump those unlocks on the market, which makes sense when your token performs like this relative to Bitcoin. So this as well is a self-fulfilling prophecy. If most people expect a token to do worse than BTC, then the selling pressure will just continue. And so my approach is to just flip this whole thing around. So instead of trying to find the best altcoins and buying them and having a diversified portfolio of altcoins, I'm just betting on falling prices of altcoins relative to Bitcoin. So I go long Bitcoin, I bet on rising prices of Bitcoin, and I go short the altcoins that are extremely poor in long-term performance. So instead of this chart, I've got the performance of this chart here. So there's now Bitcoin relative to ApeCoin. And what we see here in white, that's just the Bitcoin price. As in, Bitcoin does have its drops, but relatively speaking, since ApeCoin is so inflationary, it tends to do so much worse. And so over time, it tends to just very constantly outperform just plain old holding Bitcoin. So there's a better strategy to just buying and holding Bitcoin. There's a better strategy to just dollar cost averaging into Bitcoin. And it's not finding the next 100x altcoin. It's betting on falling altcoins because the insiders are cashing out constantly. That's actually how we can beat the market. And that's what I'm doing for the last 4 years. And so I want to share this strategy, of course. It's not as straightforward as just buying an altcoin. We do need to use decentralized finance applications. We do need to do some risk management here, but long term, again, it's worth it. I have made many tutorial videos on the topic, but in the end, you only need 2 videos, 2 very important videos just to copy trade what I do. So that's this video over here, using perpetual futures to bet on relative valuations, and this video over here, risk management with relative valuation bets. Those 2 videos in total amount to roughly 1 hour of content. After you've consumed this content, you can do bets like this. Now, many altcoins are inflationary, and so there's many such opportunities. I also have one favorite trade where the outperformance is very, very constant, where the volatility is very low. I will share that favorite trade once you join. So after you've watched those 2 videos and you've joined the community, I will share my favorite trade. And if that favorite trade does not make money after 1 month of holding, then I will refund the premium membership fee for you, no questions asked. So it's currently $125 per month, and if you don't make money with that trade in that month, you'll just get that money back. So you're not really risking that money, and you can watch all the tutorials in premium, not just the 2 that were mentioned here. So feel free to explore premium without any risk. A link to the website should appear directly here on the screen. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.